Welcome back to the channel. In today's video, I am going to do a portfolio update between my two main accounts, the first being in Composer and the second being in Schwab. So let's start with Composer. So for those of you who follow this channel, you know that I basically switched out my Composer accounts because of tax reasons dealing with mark to market. So my cost basis here is 290,000. You can see the cumulative return 10.18%, and you can see here it tracks some of the individual symphonies. I run over 100 symphonies presently, and so you can see the leaders here. Let me just reduce the screen just a little so you can see some of the leaders, Wishcasters, some of the beta ballers, Commander BND monthly, T triple Q for the long term, 200-day moving average strategy. So you can see they're doing quite well overall. 10.18. I started January 17th instead of January 1st, so it's not exactly like year to date because I had to switch over the capital, but very happy with this. So that puts basically I'm up over 29,000, 29,536 and 61 cents to be exact, year to date in Composer. So that annualizes out to over 40%, 40.71%. Basically, you take that 10.18, you divide by 3 because we're at the end of the third month now, and you multiply that number by 12. It doesn't mean that I will perform that way. Again, for those of you who follow this channel, some of you have come to the channel from the Wall Street Journal feature on me, and it documented I did 33.3% last year, so a very good year. SPY was in the mid-20s, so it's not anything, super extraordinary. I mean, what would be a super extraordinary year is if the SPY did negative 26% and I did 33.3%, but still quite a good year and off to a good start this year as well. So yeah, so that's with Composer. You can see here they just added some new settings here. They have a trade setting. The last successful trade that's new, and then the setting here is a daily, is a threshold. So you can see most of mine are daily here, or light or low thresholds. But yeah, so that's with Composer. Now let's move to Schwab. Now Schwab was lagging for a while, and it's recently come up in the last few months. And the reason for that is options. So I'll make a long story short. Basically, I was doing quite well with options, but I had to pause options a couple years ago because of one of my real estate properties. I was going to have to do a big capital project. So I was thinking about borrowing against the stock. And when you study we see a lot of videos on financial education, and particularly videos that target the rich, like by a lot of populists. They'll say like, oh, well, the rich, like, why does Mark Zuckerberg or Elon Musk or, people borrow money? Because they borrow against their stock, which is a non-taxable event, and they use that to buy assets, whether it's a home, whatever. So I was looking to do that with something that needed to be done. Didn't need to do that. But one of the stipulations when you're going to borrow against the stock is you can't trade options. So I had to pause that for a while. So now I'm back, and I've generated somewhere between probably 5,000 to 6,000 in premium, and that's really boosted the returns. Because remember, I'm not adding 5,000 or 6,000 in capital through calls and puts, essentially able to generate premium. And then what I do, it's a technique that I have. It's just sort of an intuitive technique. Is I generally always purchase assets with the premium. At some point, I may use the premium if I need to, but as it stands now, the goal is to take that. Like if I get, let's say, $500, I immediately buy $500 worth of asset stock. So recently I've been buying some of the covered call ETFs, some of the zero DTE ETFs, income-based ETFs. Previously I've bought closed-end funds or MLPs or BDCs. Some of the PIMCO funds I bought in the past. And basically the idea is like buying income Because for me personally, I'm not really too interested in the 4% rule. One of the things I like to do, and specifically with this account, I'm 44, when I'm 54 or 64, is basically just take dividends instead of having to sell stock from this account. I'm already at 1,500 or so a month, so it's likely that this account could be 5, 6, 7, 8,000 just in dividends in 10, 15 years, and then I could just take the dividends and live on that. So that's why this account has done well. You can see here, this number is a little misleading because, again, I don't want to get too wonky here and in the weeds, but when you sell options, you can see here negative 455. When you sell options, it gives it a negative value because you have to buy to close the position, which I never do. I either let the option expire worthless, or I sell calls against it, which is the wheel strategy, or puts. So I'm running the wheel strategy and only selling options. So this number is really a fake number essentially. So that's why you can see that the real number is 5. You want to add this back. So that ends up being 577,239 in total value. So year to date in the Schwab account, I'm really at 52,604 and 46 cents. That annualizes out to 10.02. So again, the Composer was 10.18. The Schwab is 10.02. That annualizes to 40.08. So pretty much the same. And again, the Schwab really caught up to the Composer due to the premium collected and deployed into income-based dividend type holdings. So hopefully that will continue to do well, and it's a beautiful mix. I also have money elsewhere in kind of boglehead buy and hold vanilla index funds, so it's nice to kind of have 3 buckets. The algo with Composer, the option income-based portfolio. This does have vanilla index fund as well, and then another that's just pure Jack Bogle, Boglehead, Rip Van Winkle. It's holding things like VOO, QQQM, DIA, VIG, SCHD, and just never selling them. It's just kind of a buy and hold. So, it also prevents blowing up your wealth, which a lot of people that do day trading and swing trading can do. So that's the Schwab, and again, they're quite equal. But the number, let's go to the combined here. I downloaded Grammarly just so I could show some text. So let's see if I can do this here. Oh, I can move this, which is nice. Look at that. So this is the Composer information here. This is the Schwab, but let's go to the combined. Let's actually kind of bring this here back over, and let's shrink it. There we go. So combined, you can see the cost basis 814, present value 896. So I was nearly at 900,000. I was actually over 900,000 a couple days ago. Just came under the last day. But yeah, so flirting with that 900 between these two accounts. And this is a really amazing number to me right here. 82,141 and 7 cents, which is profit year to date. So in the first 3 months, these two investment accounts have made more in profit than most people will make at a W-2 job. And we're only 3 months in. Now, I'm saying that not to be arrogant. I'm just showing you that the power of investing, and when you get bigger accounts, look how the math works in your favor. Now, again, in a bear market, you just had a negative here. So negative 82,000, right? Whereas your W-2 job, you're not generally going to have months where you show up 40, 50, 60 hours and you have to pay money into the job, right? So it's not apples to apples, right? But it's just a fascinating number to see that. And then, the average, divide by 3, because we're only 3 months in. So you can see that averaging right now $27,000 a month, so nearly $30,000 a month in profit to me. And then you would annualize. This is again, between the two, I'm at 10.08. So if you annualize that, 40%. So really, really a great start to the year. Quite happy with it, and yeah. And then I just wanted to talk about something that really is at the core of everything I do, be it in the Boglehead style, the buy and hold, be it in the options, be it in the algo. The thing that I understand, I feel that many people overlook is that one single percentage point or 2 percentage points or 3 percentage points, but you might think it's not much. Oh, someone over their investing lifetime got 14% return, the other person got 15 or 16 or 17. Oh, what's the difference really between 14 and 17? But when you run that over an investing lifetime, a 20-year period, it's massive. And that's one of the reasons I'm so intrigued with Composer and algorithmic investing, because I was saying to someone recently that I would be happy with a 15% return, um, in this stuff, because the buy and hold things are generally going to be between 7, let's say 11%. So that extra 5 percentage points is massive over an investing lifetime. And it's also why, when you run this out, that the best investors generally compound capital in that 20 to 30% range. Obviously, Jim Simmons, Rentex, like a whole nother level. But you look at the David Teppers, the Carl Icahns, the Warren Buffetts, the Peter Lynch's, so on and so forth. It's in that 20 to 30% range, because a very small amount of money or modest amount of money over time, when you're compounding at 20+%, 25%, 22, 29. It's just massive. And I want to show that here. So basically, you can see in my present value between just these two accounts, and I have other accounts, these are the two that I share on this channel, is basically 900,000 at this point. I'm 44 years old. So just once again to show the power of compound interest, but two, just what 1, 2, 3 percentage points difference can do. And it actually goes back. You could even argue that it goes really back to like a Boglehead, Jack Bogle philosophy, which that philosophy is buy and hold VOO or SPY index, because it's low cost or no cost, and you're likely to outperform active management with fees. So if someone's charging you 0.5% a year, or 0.8% a year, or 1%, um, over a 20-year period, that's likely to cost you hundreds of thousands, if not millions of dollars. So you can look at it the other way too and say, look, if you are able to obtain just a small amount of alpha, what that can do. So what I did here is I entered 896, 775, and 82 cents. I believe that's the correct number. And did no contributions. So that's like if I never invested again. I literally just went to the gym every day, lived on my rental income, never contributed any more capital. 20 years. And I put 15% with a 3%. So what that's a variance range. So what that's going to show, it's going to show a 12% and an 18%. And again, that's like sort of the point I'm trying to make here is when you really deeply understand compound interest and how powerful it is, you can see what it does here. So in 20 years, this 900,000 at 15% is 14.6. But at 18%, okay, it's 24 million. So let's say these algos and Composer, some people in the Discord are, yeah, it's going to do 40% or 80% or 60%. Let's just say it's 18% or 15%. Most people, Bogleheads, are going to get that 7 to 11. But you're at, let's say that some of the algos are 15, 18. I mean, look at what that does. Now, granted, the full amount isn't in Composer, but I'm also doing options, which is boosting returns. So it's kind of a cool, like, synergistic effect of using options to again squeeze pennies and boost returns even by a few percentage points there, and then using algos in Composer. But yeah, I mean, 18%, if I can garner an 18% return at 64 years old and with 24 million, 15% at 14, and look at the difference at 12%. So, this is maybe a mutual fund, an index fund, still great. 8.6 million. I mean, who's going to complain that they're 64 years old with 8.6 million in a brokerage account? So, But yeah, I just wanted to really share that to like kind of really drill down on the power of compound interest and such. And then you can play with this. So let's do this and just having fun. I'm not saying that this is going to happen. Last year I did 33.3. Okay. So let's now do a 10% variance. So that's still going to be, 23.3. So as if someone compounded 23 and 43.3. So let's say someone got kicked out of Renaissance Tech. They took a couple of the lines of code with them, and they ran it on their own, and they compounded capital of 43.3%. Or an options seller, buyer. Here we go. So we're keeping the same amount because it's the two brokerage accounts. So if these two combine, again, remember, I'm on pace right now for 40.8. So we'll just play with this. And so we're at 14. Again, you can see my point about 33.3%. Like I believe David Tepper and Icon are like 29, right? So you can see how, 500,000, 800,000, what that does. At 43%, I become a billionaire. A modest billionaire, just barely a billionaire, but a billionaire nonetheless. And you can see even at 23%, 59,148. So right now, again, did 33 last year, on track for 40 this year. So it's just fun. You can kind of just geek out with the compound interest calculator and really see the power of alpha and what that gets you. So that is it for today. And so you'll have to follow and see if I become a billionaire at 64 with a 43.3% return. So there it is. All right, take care. Ciao.